All right, let's talk about getting an edge in the market. Today, we're cracking the code on single candlestick patterns. Now, these aren't just squiggles on a chart. Think of them as the market's secret language, a way to see the story playing out between buyers and sellers, and maybe, just maybe, figure out what's coming next before everyone else does. So you're probably thinking, really? One little shape can predict the future? And, that's a fair question. But it's not about a crystal ball. It's about having a secret weapon that tells you what the crowd is thinking. And that's exactly what this is. It's the language that pros use to see the raw, emotional tug-of-war between the bulls who are trying to push prices up and the bears who are trying to drag them down. If you can learn to speak this language, you're going to have a serious advantage. Okay, so before we start reading entire novels, we need to learn the alphabet, right? We've got to break it down and start with the most basic, fundamental piece of the puzzle. So every single candle you see, doesn't matter if it's for a whole day or just 1 minute, it's showing you 4 key things: where the price opened, the highest it got, the lowest it went, and where it finally closed. But the real magic isn't in those numbers. It's the shape they make. That shape and its color tell you in a split second who won that round. And what's so powerful about this is that a single shape gives you an instant snapshot of the market's mood. You see a big, long body? That's conviction. Someone is clearly in charge. You see a tiny little body with long shadows sticking out? Well, that was a messy street fight with no clear winner. It's all right there for you to see. Reversals, trends, and total gridlock. All right, now that we know the alphabet, let's start building our arsenal. We're going to focus on 3 of the most common, most powerful single candle patterns that you need to know. One tells you the bulls might be taking over, one tells you the bears are coming, and one says the market has no clue what it wants to do. First up, we've got the hammer. This is a classic, a go-to for so many traders. When you spot this at the end of a downtrend, it's a huge flashing light that the sellers might finally be running out of gas. What's so cool about this pattern is the story it tells. Look at that long lower shadow. That means the sellers tried with everything they had to push the price down, down, down. But then, bam, the buyers came storming back in, rejected those low prices, and drove the price all the way back up. It's a huge show of force from the buyers. But, and this is a big but, here's the reality check. Don't get me wrong, the hammer is an awesome early morning, and it even gives you a perfect spot for your stop loss. The catch? It can be a total fake out in a sideways market. It's not a signal you can trust on its own. You absolutely must wait to see if the next candle confirms the move higher. Okay, on to pattern number 2, the shooting star. Just think of it as the hammer's evil twin. It shows up at the top of an uptrend, and it's a massive warning sign that the bears are about to take over. And this tells the exact opposite story. The buyers got cocky, they pushed the price way up. But then the sellers came down from above and just slammed it right back down, forcing it to close near the low. It's a brutal rejection of higher prices, and it shows the buyers have totally lost control. And just like its twin, the shooting star is a great heads up and gives you a clear line in the sand for a stop loss. But here's the thing, it really only means something after a big run-up, and you've got to see some heavy selling volume to make sure it's the real deal and not just some random market noise. Now for our third pattern, and this one's a little different. It's not about winning or losing, it's about a tie. The Doji is the ultimate sign of indecision. It's a perfect stalemate, a tug of war where neither side could move the other an inch. The whole secret here is that tiny, almost non-existent body. It means the price went on a wild ride, up and down, but ultimately ended right back where it started. If you see this after a long trend, that's a huge warning that whoever was in charge is getting tired. Oh, and keep an eye out for its cousins, the gravestone and dragonfly dojis. They give you even more specific clues about a potential reversal. Okay, you know 3 patterns, you're ready to go make some money, right? No, absolutely not. And I need you to listen very closely here because this is probably the most important part of this whole thing. Knowing the patterns is easy. Avoiding the trap that catches almost everyone, that's the hard part. Let that sink in for a second. If you just trade a pattern because you see it on a chart, you are setting yourself up to lose money. Seriously. These patterns pop up all the time, but most of them are just meaningless noise. Using them all by themselves is basically just gambling. And this is how it usually plays out. It's a painful story. You spot a beautiful textbook hammer, you get that rush of excitement, you think this is it, and you jump right in. And then the market just keeps on falling. You get stopped out, and you're left wondering what went wrong. The pattern looked perfect, but it was a trap. So, how do we avoid that trap? How do we actually turn these patterns into something we can profit from? The answer is one word, and you need to burn it into your brain: confirmation. Professionals don't just trade patterns, they wait for a confirmed setup. Now look at the difference here. The pro sees that exact same hammer, but they don't just blindly jump in. They have a checklist. First, they check the context. Is this pattern showing up at a really important price level? Next, they look for confirmation. Is there a big spike in volume to back it up? It's only after they get a yes to all these questions that they even think about making a trade. So here it is, the 3 keys you absolutely have to have. First, you need the pattern. That's your alert, your heads up. Second, you need context. That tells you if the alert is even worth looking at. And third, you need confirmation. That's your green light. If you don't have all 3, it's not a trade, it's a gamble. Look, if you remember only one thing from our time here today, please let it be this: a hammer, a shooting star. These things are not buy or sell signals. They are flashing yellow lights. They're the market telling you to slow down, pay attention, and start looking for more evidence, because something might be about to change. So, you now have the alphabet of the market's secret language. You can start to see the battles, the exhaustion, the sudden shifts in power. The real question is, now that you know how to read it, and more importantly, how to wait for confirmation, what stories are the charts going to start telling you?